Retirement accounts are a fascinating topic, and there's a lot of discussion about uh, doing things in particular ways or keeping track of things in certain ways. There are many different elements to retirement accounts. When most people who have a retirement account think about it, they think of it as a nest egg that they have, obviously, for their retirement. When you have when you are trading stocks, people, first of all, there's a very small percentage of people that will trade stocks like a day trader. The vast majority of people will put their money in an account and either leave it in mutual funds or let a broker handle it or do something along those lines. The biggest problem with that is, one of the biggest things that I hear is, or let me say mistakes that I hear, is the stock market goes up 8% annually and I'm fine with an 8% return. And besides, when it crashed here in the last 8 or 10 years, and now it's back up to where it was from the beginning. Well, that's fine, except that if you have a system that can recognize when things are going to go down, you can get out and take advantage of that situation. And as an example, if you had a $400,000 account and it went down in this last recession, many people say 40%, some people say 50%. If your value went down to $200,000, most people will say, well, it'll come back, and that's fine for the person that doesn't need the money. If you needed any money during that interim before it got back up, it took those 6 to 8 years to get back up to where it was from the beginning, you had to use some of that money, or in other words, sell some of those stocks that you were in, then that was not the case for you. You lost money. Likewise, people will think that they don't need to worry about it, yet this is their nest egg. The number one principle in the business in day trading is to protect the principal, or protect the nest egg. You can buy and sell and trade, but you protect what you already have. And that is not the attitude of people in other types of trading. And you will get financial planners, or you'll get stockbrokers that'll tell you, it'll come back. And it's not the fault of the stockbroker, or the fault necessarily of I guess I should say it's not the fault of the financial planner, because what they're telling you is probably basically true. But what they don't realize is what technical analysis is all about. When you can take leading indicators and see what's going to happen tomorrow in a small percentages of stocks every single day. And so when they tell you that, well, you can't see what's happening tomorrow, so you just might as well leave it in, there is no protection that you are establishing for your nest egg. They tell you, well, just watch it. Well, the only thing people do is watch it go down. They don't have the ability to get in or get out. And what I'm trying to convey here is to is for you to have an ability to move your position or to sell your position when you need to. You can go to the weekly or monthly positions or stock time frames, chart time frames, I should say, and you can watch your investments based on what you see from the technical analysis situation. So many people will think about that, and they will just go oh hum and not do anything about it. And yet when the crash comes, instead of being in having that $400,000 account and seeing the downturn coming, you can get out of it. And when it hits the bottom, because that's what the day trading Visual Basic system is built on: price reversal, recognition, identification. We identify cycle highs and cycle lows. You can do that on an hourly chart, a daily chart, a weekly chart, or a monthly chart. You can identify those cycle highs and cycle lows, and you can get out, take that $400,000 out and put it back in when the bottom hits. And then when it rises back up, you've got 600 or 800,000 in your account instead of you're right back to where you were when you started. And that's what those people will tell you to do. And again, I'm not trying to run down that situation or those people. They honestly believe that the advice that they're giving you, and for the most part it's true, because they don't understand that that they have the wrong information, that you can really see things that are coming about. You can identify the stock market brokers don't want you to know that information. That's a different level of understanding that they have. And they desire to have your funds to work with trading back and forth. And I mean, let's face it, there are many times when we see movements that will go up 6, 8, 12, 15, 25% in one day. And people talk about an 8% annual increase. Maybe. It doesn't happen every year, but over the average of the last, I don't know what, I forgot what the statistics on that was, but the last maybe 75 years, or I don't know what that was. Maybe it was from when it started. It's gone up 8%. I don't know, but 8% is not very safe in terms of what you're in the relationship with your nest egg. It's one thing to put your nest egg in a savings account. It's a lot safer, even if you earned zero return, than to leave it unchecked. You don't watch it. You get home at supper time, and you find out that the value of your stock dropped 10% today. So, example, over 10 years ago, in 2007, I had the premise I had because of my inability to, my inconsistency in trading, my inability to identify how the prices were moving. The first trade I made on my computer, 2007, I thought it was going to go up. And it did go up for a little while, and then it went back down, and as I recall, it closed in a red candle that day. So in other words, I lost money. When I decided to work on this, it was for my own particular situation. I wasn't planning on sharing this or doing anything like that at that point in time. But my premise was, I'm going to trade, and then I'm going to find a method or a technique or a procedure And I'm going to take that procedure, I'll enhance that procedure, and then I'll have a better system to trade with. And some weeks I'd make 5 additional indicators, and some weeks I'd have 10 more indicators, and I thought I had a better system. I didn't have a better system. I had more indicators. And it was I created indicators for probably 3 or 4 years and didn't realize that I was creating totally the complete wrong indicators that you need to build to identify and analyze stocks. The process that I was in, I was going to trade, and then I was going to find that and enhance that system that I was going to locate. And I absolutely knew. I asked the question, what's more important, the next trade that you make or the system that you use to find the next trade that you make? And obviously the system is more important. And I knew that. Why did I continue to trade when I knew what I was using was far from good? And I refer to it in some of my videos as traps that we get into. And people that will leave their money in a retirement account have been educated into a trap. And if you're not watching your nest egg and have the ability to immediately pull your nest egg, I mean, do you remember reading the newspaper one day when they pulled $5 billion? The investors in the market got out to the tune of $5 billion one day? Do you understand what's going on? It's a powerful situation. I firmly believe that you could use this system as nothing more than a signal system to identify when your nest egg is moving. You wouldn't have to trade a thing, and it's worth the monthly fee, that the power that this system has to identify cycle highs and cycle lows. It's an amazing, think about the attitude that the general population has about a retirement account. They think it's not going to be hurt. But yet in 2008 and 9, maybe 7, 8, and 9, we saw 40-50% of the values drop. And there were billions of dollars that left the market. And they waited, and a lot of them sold short and made money going down. And then they bought at the bottom and made money going back up. And the vast majority of people sat. Oh, just hang on to it. It'll come back. That's exactly what they want you to do. That mental attitude is one that is just like what I had when I was trying to alleviate my inconsistency in trading. I thought I'd trade, and I'd also find this system or this method or this this technique or procedure. Well, after many years of creating indicators, we finally started seeing patterns, and those patterns are basically indicator arrangements. And you take those indicator arrangements, and in the example that I've used elsewhere in some of the videos, you take 2 out of 10 of those patterns and they become nice big green candles. And those are the ones you want. Well, when you analyze those 2 compared to the other 8, you find out that they had certain conditions. And if you replicate those conditions and only buy that pattern when those conditions are there, you mimic the results. and it's high probability. And I don't mean that, some people think 50% high probability or 70% is high probability. I'm talking about 90 or 95% high probability. And that's because we grabbed the conditions from those two, and those two were actually 100% of what's happening to make the stocks be nice big green candles, to make that pattern be nice big green candles. Then you take signals, and we can identify when to enter or exit a trade. You put those patterns, you find that pattern, you verify the conditions, and you use the signal, or you wait for the signal, and then you have a formula. You have a system. DTVB has 3 powers to it: the indicator power, the formula power, and the procedures power. The formula power alone will identify, and you can use it to identify cycle highs and cycle lows, not only those patterns that I was talking about. The whole system is built on strength. We found that if you analyze the line length of an indicator, that's one basic method to use to identify strength. And the other method is divergence. And when we have 22 MFR, market force recognition indicators, and those 22 give us a powerhouse of information as far as the market forces or tiny pressure movements within a stock. And you can look at that on an hourly or a daily or a weekly or a monthly stock chart. And that formula then becomes the essence of the system. And we have a system that you can use in a variety of different ways. And protecting your retirement account is one of them. And so most people will never get to this site or get to this video. They are content at looking and having somebody else control their retirement account. And that is not the way to do it. And it's very unfortunate, but knowledge is power. And when you have a system that works, when I was building the system or starting to build the system 10 years ago, I mandated mentally that I had to have the ability to see what was happening with that stock the next day. Those in the business call these indicators leading indicators. Momentum is a leading indicator, or can be a leading indicator. But we don't use momentum in our system. There's better things to use. The power of DTVB is in that combination. The indicate in the 3 powers is what I'm referring to. But the indicators, those sensitive indicators, are the heart of the system. Without those, you wouldn't have any patterns, you wouldn't have any conditions, and you wouldn't have any signals. And we spent many years getting to the point at which we understood how to create the indicators. Then we paired them together, we matched and synchronized most of them, and to identify differences in relationship, differences in how one line will move. You can have directional divergence. One goes up, one goes down. You can have a pattern like a BOC pattern, bottom of cycle pattern. When a bottom of cycle pattern, and we normally see it it's a V-shaped pattern. But when the left leg, or when the right leg is longer than the left leg, we call it a BOC higher pattern. and that has more power to it because the indicator line is longer. Now, the default indicators that you get on your different on your live platforms, those are basically worthless. If you were watching the stocks for an hour and you could find 10 different types of divergent on the default indicators, you could probably find 50 or 100 divergent conditions using the DTBB system. Find 50. You'd find a huge number of additional divergent conditions, is what I'm trying to say. The sensitivity is the key. And this is why the system is so effective, or one of the reasons why the system is so effective. And you can say it's the formula, you can say it's the indicators. It's a combination of those things. Take a BOC pattern, a bottom of cycle pattern, and now place it on a peak. So you got a down-up pattern, and the right leg is higher than the left leg. This happens all the time on a peak. Having a BOC pattern when you should have a top of cycle pattern, a TOC pattern, is a obvious case of divergence, and it's also a powerful signal. Basically, what you have is the stock was pushed up higher than it should be. You can talk about oversold or overbought, but in reality, these indicators will show you BOC patterns on peaks, and because it was pushed up too far, it then reacts by going down the next day. And so that type of divergence on a peak, the BOC higher pattern on a peak, is significant for identifying strength in a movement. And there are many other. We built the entire system to identify strength, and we find strength when cycles start. Like when you have a BOC pattern at the bottom of a cycle and it starts going up. If it's a BOC higher pattern, that tells us that strength is there, first off, and that can last, depending on what your other indicators are telling you, that can last for several days. So in other words, you can find those uptrends, the 2, 3, 4 day green candle movements. You can find gaps. We have 3 patterns that we use. They're the identical indicators. They are the down touches. I'm referring now to gaps up. We have down touches in the trend chart, and you have the proximity group, both location and shape patterns. And the proximity group is basically the power lines. The power pink, blue, white, and yellow are the power 4. Power Zion makes it the power 5. And those are the 5 lines within the power chart that we watch all the time. And those 3 identical patterns, those 3 patterns, the identical indicators, the down touches in the trend chart, and the proximity groups in the power chart, those are 3 patterns that we watch out of the 23 pattern types up that are in the list. We also have 23 pattern types down for when values go down or gap down. But we can find gaps before the gap occurs through the 3 pattern, through the 3 gap patterns. So it's an amazing system. We don't know of anybody out there that is doing something just as simple as identifying strength in a market movement. I don't know of anybody, let alone somebody that can find gaps before the gap occurs. we have a powerful system. It's powerful that you can use it to trade. You can use it to protect your IRA or your retirement account in a big way. It's very valuable, has a lot of ability to be advantageous in a variety of ways. If you're here just looking at a retirement account, I encourage you to look at more videos and see what we've got here. If you know of anybody that should look at a retirement account, this link you can send them a link on this video. YouTube, my day trading visual basics channel on YouTube is there, and you can link that out to a friend that you might have. So it's amazing. We are totally dumbfounded some days on what this system can produce in identifying and just giving us valuable information. So if you are trading, have fun trading. Don't make it a job. When I was losing money back in 2007, it wasn't fun. But I spent many decades selling real estate and developing real estate in the Twin Cities market before I got started with this. And just like developing real estate was a lot of fun, so too is this. And I hope you're having fun.